As an investor in the stock market and somebody that owns shares in a particular company, it is really important to be aware of what earnings are, and there are many ways to express earnings. One of the common metrics that is thrown out there is the EPS, which stands for the earnings per share. Now, when it comes to the EPS, there are two different types of EPS that you can analyze: the basic EPS and the EPS diluted. Hello everyone, my name is Guillermo and I've analyzed over $1 billion worth of real estate deals working as a financial analyst for one of Canada's largest real estate investment trusts. And in this video, I want to show you exactly how it is that you can calculate the basic EPS and the diluted EPS and what the key differences are between the two metrics that you need to know in order to make a good investment decision. And if you stay until the end of the video, I'm also going to share with you how it is that automatically you can get this metric on Excel and Google Sheets, so that way you can build all types of different financial analysis models and screeners for your spreadsheets. The first thing to know in order to differentiate between basic EPS and EPS diluted is what is EPS in the first place. And what this metric is essentially the net income per share of a company, otherwise known as the profit, divided by the number of shares outstanding of a company. Shares outstanding, of course, is the number of shares that you can buy in total of a particular company. And obviously, the more shares you own of a particular company, the more control you have of that particular company, and the opposite applies. So that's essentially the basic EPS. Now, on the other hand, the EPS diluted follows a key difference. And this is the fact that rather than just taking the net income and dividing it by the number of shares outstanding, you take the number of shares outstanding and you add any additional shares or convertibles that can turn into additional shares for that particular company. So what happens is that many companies have given number of shares, but then they also have other shares that they give to employees or to other shareholders or to other people. And this can be like share options, which is an additional way to provide compensation for employees, for example. And so what happens is that eventually the share options can actually convert to become shares outstanding of that particular company. So the EPS diluted takes this into account. It essentially adds up all the different kinds of shares that can turn into shares outstanding, adds up that number to the number of shares, and then takes the net income divided by that number, and that provides you with the EPS diluted. Now let's get into the actual calculation in Excel so you can understand the difference between these two metrics in more detail. Okay, so let's first start with the basic EPS. In order to do this calculation, we need to get the respective financial information. For that, I'm just going to type in the company ticker right here. For this, I'm just using the Wisesheets add-on. We have many videos on our channel that you can check out, but you can also get the data yourself, any other means that you can find. Now, once you do this, as you can see, you get the different financial statements. In this case, we're only interested in the income statement. And right away here, you will see all the information that we're looking for. So the main information in this case is the net income, which you can see right here. You can see how this is calculated on a historical basis. And then all we need is the number of shares outstanding. So there's two number of shares outstanding. There's the number of shares outstanding right now, and there's the number of shares outstanding for that period, and that is known as the weighted average shares outstanding number. So in order to calculate the basic EPS, this is super simple. You're gonna take the net income and then you're gonna divide it by the weighted average shares outstanding, as you can see right here. Click enter, and this will be the EPS. You can round it to decimals because that's usually how this number is reported, and you can drag this formula across so that you can calculate this on a historical basis. As you can see though, this number is already calculated here, but regardless, now you know how to calculate it and you can see the results are exactly the same. So this right here would be the basic EPS. Now let's do the diluted EPS. The diluted EPS again is a very simple calculation, and all we need to do, as we talked about before, is take the net income, except this time we're gonna take the weighted average shares outstanding diluted, and this is a number that can be found on the company's financial statements, but again, if you have a setup like this, it makes it a lot more easy to calculate. So we take that divided by this, and then we can drag this across, round this to 2 decimals, and as you can see, this is the same number as reported right here. And as you can see, generally what's going to happen is that the EPS diluted is lower than the basic EPS, and the reason why is because here on this number you're taking into account the number of shares outstanding, a number that is higher than the number here. So when you have a division and the denominator is higher, that number is going to result in an odd number, because now you're adding all the different shares that we talked about before, which are the number of convertible shares and stuff like that. That obviously adds up to the original number, and then obviously that's going to make the diluted EPS generally lower than the basic EPS. Now a key question that comes up is, which number should I look at? Should I look at the basic EPS or the diluted EPS? The answer is you should look at both, the diluted and the basic EPS. And the reason why is because the basic EPS tells you essentially if all the company's profits were to be distributed to the company's shareholders, what would be the ownership share that you would have? How much would you get? Now the diluted EPS tells you how much you would get if all the different options and all the different types of shares were converted into actual shares of the company. So it is important to be able to look at both. And something that you do need to know that is very important is that the diluted EPS, you can use it in other calculations like valuations and stuff like that. And generally this is used because it's a more conservative number. This is a more aggressive number, which reflects today's reality, but this is a more conservative number because this reflects what could happen and what is likely to happen in the future. Now, because you stuck to the end of the video, I want to keep my word and show you how it is that you can get the EPS automatically calculated. So as you can see right here on the screen, we have a really powerful way of analyzing a company. This, however, could be anything, could be any financial metrics that you want. And right here we have the EPS metric. So you can see this is calculated on a historical basis. Now the cool thing about this setup is that you can simply change the company ticker, and as you can see, the data will automatically update for you, including the EPS calculation right here. Now how does this work? Well, this is using a custom function from Wisesheets, and right here this is taking the Wise function, which basically takes the company's ticker, the company's parameter, the parameter you're looking for, which is the EPS, and then a period, which in this case is the year 2006, and this is returning that number. So when you click enter, you can see that this is reloading right here. And it is as simple as that. With this, you can build some really complex models. In this case, this is just a simple one, but you can build some DCFs, you can build some stock trackers, you can build pretty much anything that you can imagine, because this includes data such as financials, key metrics, real-time data, etc. The last thing I want to share with you is how it is that you can build a really powerful custom screener in Excel and Google Sheets. In order to do this, all you need to do is assemble a list of companies, and they must follow the ticker system from Yahoo Finance. So in this case, we have a whole bunch of semiconductor stocks, and then here we have a whole bunch of different metrics. These metrics can be historical metrics, TTM metrics, quarterly metrics, etc. So in this case, we have the PE ratio, price to sales, and a whole bunch of other information that you can see right here, including the price, which is real-time information. All you need to do is select the list of companies that you want to get data for, click right here, and then select the list of parameters, and then click right here. And this includes, as you can see, the EPS and the EPS diluted. These numbers are going to be for the last year for all of these different companies right here. After that, simply click on get data. And as you can see right away, you're going to get all of the different ratios and metrics. Some of this information is live. So if I press refresh, you will see how the numbers will change slightly. And then some other information is historical, so that won't change. But as you can see, this presents you with a really powerful way to compare the EPS and EPS diluted for many different companies in the same industry right away. Now you know the difference between the basic EPS and the EPS diluted numbers, so be sure to use this information so that you can make great investment decisions for yourself and for those people that you most care about. If you've enjoyed this video, make sure to subscribe and turn on the notification zone so that way you get notified every time we release a new video like this that's going to allow you to take your investing game to the next level. I'll see you in the next one.